The rand gaining for the third consecutive session on Monday, while the JSE closed weaker amid softer global markets, with the focus shifting to what the U.S. Federal Reserve will do at its next policy meeting. JustOneLap founder is Simon Brown, joining us now for a quick markets analysis. Simon, good morning to you and thank you for your time. Let's begin with your quick overview of how the markets are performing in early trade after the rand gained for the third consecutive session, as we say in that intro, while the JSE, though, closed weaker.
Morning, Polly. Absolutely. Let's start with the rand. Trading 19.20 against the US dollar. Still a horror number. But last week it was threatening to be at 20 against the dollar. So we'll take that improvement of around 80 cents. 23.87 against pound, 20.56 on the euro. And our market is red once again, taking our lead from weak US markets overnight, but only a little. We've improved off the earlier lows. Overall markets down a third, industrials off 0.5%, and financials actually ever so slightly in the green, 0.03%. All eyes definitely waiting for that GDP during about 2 hours' time.
Well, let's talk about those GDP numbers that are expected later today for the first quarter of 2023. There is some sentiment that this might be shocking news, given what the third quarter gave us. It was completely unexpected. But let's look ahead. Plummeting levels last seen in the third quarter of 2021 at the height of the pandemic. What should we expect from the data this time around?
Going to be a tough set of numbers. I mean, certainly, obviously, we've got load shedding. We know about that, and a year ago we had it, but nowhere near these sort of levels. It was occasional rather than literally every day since, it was 24 June when we suddenly found ourselves sitting on stage 6. Expectation for year on year is a 0.2% number, so positive. But 0.2 is hardly any growth. We've probably got a population growth of around 1.5%, 1.7%. So individually, we're all going backwards. The big number is the quarter on quarter. The previous number was minus 1.3. That was the absolute shocker that you had expected. Market was looking for a minus 0.4. Came in a lot weaker. This time around, we're actually looking for a positive quarter on quarter, but only 0.4. So again, very, very modest. The shock is going to be not that we might get giant numbers, that is unexpected, but that we might see some more negative numbers come in. Certainly we're expecting positive, but only just, not much at all.
Sure. Let's talk company news. British American Tobacco publishing what is called a pre-close trading update, which shows that they are on track to meet the full year guidance. Talk us through their performance.
Yeah, I mean, British American Tobacco, truthfully, a boring company. And I don't say that in a negative sense at all. They're almost predictable. They're trying to shift people from what they call harmful combustion, nicotine delivery methods. We call those cigarettes, and trying to get people more into the vaping space. They've had some challenges, most notably in California, where flavored, which includes menthol, has been banned, although seemingly not yet being policed. But a good, steady grower. It's never going to be shooting the lights out. Some people won't touch it because of moral reasons, but it is going to be one of those very predictable companies, and it reports in sterling. So you're effectively getting a sterling, a British pound earner on the JSE with fairly decent, predictable quarterly dividends being paid.
Let's conclude the conversation with the Premier Group, also publishing its financial results for the year which ended on the 31st of March 2023. How have they fared in the period under review?
I'm going to say, Polly, these were not bad numbers. I mean, Premier Group, probably best known for making bread. They deliver, I think it's 363 days a year across 9 or 10,000 different outlets in the country. They certainly have seen input price inflation moderating a bit. That'll mostly be on the wheat side for them. They've got new factories in Pretoria, expanding in the Western Cape. Both of those have brought in efficiencies. They are obviously seeing other inflation. That would be rates. That would be just staffing costs, diesel and the like. Those input costs are hurting them, but a good set of numbers, a really good one. We've got an analysis review with the directors in about half an hour's time. We'll get more color there. But I thought a good set of numbers and better than I was expecting. Load shedding hurt, but even that was moderate at about 32 million for the period. So no real shockers, and truthfully, actually some better than expected.
Well, Simon, on that positive note, thank you very much. Let's end the conversation there.